Good morning, everybody. It's the 12th of January. We are Signal Centre, or I am Signal Centre, talking bull. Just myself today, hoping that Steve will be joining me shortly. But in the event that he doesn't, I'll crack on, run through the latest headlines and update you on some charts. So, first up, yesterday we had the Federal Reserve Chair, Jerome Powell, sorting to reassure lawmakers and investors on Tuesday that the central bank can pull off the tricky task of bringing down 4-decade high inflation without damaging the US economy. The S&P halted a 5-day slide yesterday, and the Nasdaq 100 outperformed major benchmarks as the US dollar fell. The Euro Stoxx 50 futures are rising this morning, so we are seeing equity markets very much, well, certainly they were anyway, on the front foot. It looks like they have reversed a little bit, which we'll come on to shortly. In terms of what's going on with COVID, France registered a new record number of daily COVID-19 infections as the Omicron variant continues its fast-paced spread across the country. Still, the euro area's second largest economic recovery is proving almost immune to disruption from the wave of infections as it sets to get extra support as supply constraints start to ease. We've also seen some news overnight on yesterday with relation to cryptocurrencies. According to an annual survey by the regulators of the North American Securities Administration Association, they said investments tied to cryptocurrencies and digital assets are by far the biggest threats facing individual investors in 2022. Separately, Kim Kardashian and Floyd Mayweather Jr. were both sued for allegedly scamming investors into a cryptocurrency called Ethereum Max. In terms of what's going on in the UK at the moment, Boris Johnson and his government are under severe pressure. Conservative MPs are watching Boris Johnson stonewall over allegations of pandemic rule-breaking parties at his office with horror. A degree of gallows humour. Opposition politicians have called for the UK leader to resign over the latest claims, but it's the reaction of his own Tories that will be of most concern to the Prime Minister. One Conservative MP described the mood as sulphurous, while another predicted that it is the end of the road for Johnson. So lots to come out of this still in the coming days. As we get the investigation underway with what's actually happened at Number 10 and whether or not they were in breach of the rules that were in place at the time. So let's get stuck into some charts. I will start with FX and hope that Steve does join me. But this is the dollar index chart. As I mentioned during the market highlights, there was weakness in the dollar index yesterday, stemming from the push to riskier assets yesterday, as we saw Nasdaq outperform most of the other markets and end that 5-day losing streak. So this is the red candle that I'm referring to yesterday, quite a reversal based on what we saw in the previous session, but we're bang in line with this support line here, this blue line that we've got, which comes in today around about 95.56. So we have seen prices for the dollar index consolidate within this channel, if you like, or this range for a number of weeks now. But during that time, we've just seen this uptrend line sort of come up to speed with where the current price is. So any pullback, I suspect, is likely to be short-lived and maybe find some support around the lower end of this bullish channel. Even if it does break that bullish channel, I think overall the outlook still remains quite positive on a longer-term view. Let's just have a quick look at the weekly chart just to highlight what I'm talking about there. Let's get rid of these annotations. So this is the dollar index. As you can see, it's had this big breakout of this wedge that formed on the weekly chart. We've seen this continuation higher. Seen a little bit of stalling in the price over recent weeks, but any pullback towards this kind of level 93.43, providing it holds above that, I still think will be quite bullish for the dollar index, based on this double bottom pattern that we completed back here in September last year. So overall, still remain positive in the dollar index, and it is approaching the lower end of that bullish channel. So we'll see what sort of reaction that gets on a technical basis in the coming days and weeks. Moving over to Euro US dollar, that obviously continues this consolidation as well within some sort of wedge or triangle pattern that seems to be forming here. Ultimately, the trend remains bearish and we are approaching that downtrend resistance line. So maybe we'll see a reaction there. If it does break higher, then certainly out of this triangle pattern that's formed, then we may see a continuation of this correction higher towards 115.25. If it breaks to the downside, which doesn't look like it's going to happen right now or anytime soon, then we expect to see a continuation lower towards this 110.58 level. Looking at cable, that's broken out of this short-term downtrend. Another strong session yesterday due to dollar weakness, and yeah, that's looking pretty good. So maybe we'll see a little bit of a pullback to retest that broken trend downtrend support before a continuation higher, maybe as high as 138.91. Hi, Steve.
Hello, mate. Sorry about that. I was recording videos.
Okay, no worries at all.
Just got distracted. Sorry about that.
It's okay, no problem. So this is Euro Sterling. As we've spoken about already, it's broken below this bearish channel. It's broken below some key supports, most notably at 83.80. Looks set to continue moving lower towards this large support here that goes back to 2019 at 82.75. So no change in the outlook there. Still looking for lower prices and no sign of any kind of short-term corrective move higher taking shape at the moment. Euro yen, not really much to go on at the moment. It has had a decent push to the upside. We've got some resistance at 131.75, so still expecting that to repel any advances on the upside. If we take a look at Aussie US dollar, we saw a close above the 10-period moving average yesterday on the back of that dollar weakness that we saw, and obviously the move into sort of riskier assets. We've broken out of this sort of wedge or continuation pattern that formed last week, and maybe now what we're seeing is a retest of the underside of that. So that may be a cue for some further selling to take place in the coming sessions. Let's have a look at dollar yen. That was holding above this resistance at 115.52 when it broke to new highs. On the retest so far, we've not seen any evidence of that holding. It has overshot that level and looks to be still in consolidation mode at the moment. So no signs of the dip buys stepping back in with that just yet. So overall, still pretty positive on the dollar index, despite it being within this kind of consolidation range. The bullish channel is catching up with the price action, so maybe we'll see some sort of reaction here, but we broke that 5-day losing streak on the S&P 500, as I'm sure Steve will come on to shortly. So while there is a bit of appetite for risk, it's likely that dollar index is not going to do very much, maybe slide a little bit lower. Steve, are you okay to?
Yeah, sure. Yeah, all ready. Sure. I'll just share my screen.
Sure.
I didn't want to share it and just take the limelight away from you, Joe. I'll start with commodities, then go on to indices. I've done a video on the energy markets this morning, WTI, Brent crude oil, and natural gas. So take a look at that on the YouTube channel. Interesting trading day yesterday, and this is obviously assisted with the some of the indices as well. Looking at the weekly chart, we are in the middle of a correction. We've got this ABC correction we're looking for. However, I was thinking maybe the 78.6% fib retracement had done enough, but yesterday proved me wrong, and price action looks focused really on maybe potential return to the $85 level, which was the multi-year high posted on the week of the 25th of October. So looking at the daily chart, we can see this break higher. The Ichimoku cloud obviously broken through that nicely on the 4th of Jan, and we've taken out the resistance that we were holding around about $79 to $80 and taken that out nicely, and just seems to be pushing higher. We've got oil inventories later as well, so watch out for that. That should add a nice little bit of volatility, especially with this turnaround. Momentum looked to be stalling, as I say, but yesterday bucked that trend. This was a 4-hour chart that we were looking at last week, had this triangle formation, which would normally have a tendency to break to the downside. However, it has taken out that resistance and broken higher. So 4-hour trend. So short-term, medium and long-term trend looking pretty positive on the WTI crude oil. Very similar in Brent crude oil, obviously different levels. It trades at a premium to WTI, so that we're looking at 85.80 as that high. And also interesting was natural gas. We've been talking about this for a week after the big breakdown that we saw the week of the 29th of November. Big gap open, which was filled the following week, but also that when it did fill it that week, it sort of released a load more pressure to the downside. Stalled around about 350. We were trading in this range for a month, 350 to $4, just slightly higher than $4. But we've broken really aggressively above it now, trading 415. So let's take a look at the next levels that we've got in here. You can see that I've added some Fibonacci retracement levels. 38.2 would be just a normal retracement level. That comes in where the Ichimoku cloud does on the daily chart. So that'll be an interesting level between 465 and 475. So for me, that feels like a natural target over the coming days and week, maybe. On the gold side of things, the reaction higher has continued. We're trading around the resistance around, which is if we look back, we've seen plenty of resistance around this 1815 level. Trading around there now, very much focused on the upside and maybe a return to the 1834 on gold. Looking at the 4-hour Ichimoku cloud, we've broken above it, although reversing ever so slightly now. So maybe looking to buy dips in there. We can see the momentum is stalling, but the what we were seeing with this, there was indication of bearish divergence where price was going higher, where momentum was slowing down, but that seems to have broken away. So slightly positive on the gold side of things. Looking at the indices, wrong one, wrong button. Obviously the oil price and the interest rate scenarios looking good for FTSE. That's pushing higher. Looking at the weekly chart, we can see we're definitely heading, well, not definitely, obviously the silly word to say, looks like we're heading back to 7,680, which was the high from January 2020. That was just before the pandemic hit. As you can see, we had this huge sell-off. So some good resistance levels above here between that level and 7,900 on the FTSE. Shorter term levels, we can look at the 4-hour trend is higher and looks to be supported by the cloud as well. So support coming in around about the 7,460 area, and just seems to be a never-ending story on the indices of recovering from these sell-offs that we get. Similar sort of price action in DAX. Although currently we're posting a bit of a bearish candle. We had a little bit of a dip down towards 15,950, but looks like we're recovering from there. On the hourly chart, you can see just how quickly these things move. Sorry, this is a 15-minute chart. What am I doing with that? Giving all my secrets away. We saw a shooting star on the hourly and then this big push lower, but price is looking to recover at the moment, trading around 16,000, nice round number. Let's take a look at how the Dow recovered as well. The big spike down that we saw on Monday, Tuesday recovery, engulfing all the losses, and we've pushed higher today. So again, looking for further upside on the Dow index, and a nice recovery for the Nasdaq. The morning star formation, you have the sell-off, you have the bullish hammer, and then you have the push higher, and that looks to be completed. So further upside on Nasdaq expected as well. It really seems to have sort of like held on to this positive trend. Same in the S&P. The morning star formation found support at previous swing low levels, and the open and close of the 21st and the 20th of December, and right in the Ichimoku cloud, we found support there. So that's a nice, really nice recovery from the indices. Cryptocurrencies, can't forget about cryptos. We saw this as well. We've over the last couple of days, we've fancied a recovery in this. We've posted a few ideas on buying the dip around about this 39,500, 40,000 level, and it is playing out very nicely indeed. A very positive day yesterday, got up to 43,150. This is the 4-hour chart. Again, lovely recovery, just stalling slightly at the Ichimoku cloud. But again, this looks to be a typical inverse head and shoulders formation. Further upside would be expected, especially if we get a break of the 43,600 level. I'd see that open up a targeted move towards the sort of 46,000 level for me. Ethereum, again, recovering nicely. At resistance at the moment, really needs to break 32.75, and Cardano, if we look at the longer term chart, will be back above, or almost back above. It is just back above that trend line that we were focused on. The breakdown below it, the close below it, confirming a break, but rejection of that. So Cardano looking for higher levels also. That's about it.
Lovely, thank you. Okay, gun to the head trades from yesterday. So let's have a quick look at those. We had a stop out on the Nasdaq. Unfortunately, wrong-footed a bit on the sell-off yesterday, and obviously the bounce back. You know, inevitable, I guess. We always see these bounce backs in the indices, but we live in hope, Steve, that one day one of them will follow through to the downside, and we'll see some good results. But we also had a sell trade on cable, which was going really well actually, up until sort of 3-4 o'clock, when we had comments out from Jerome Powell, and as a result then we saw dollar weakness, and that impacted on the trade. So 9 ticks offside on that, 0.23R, certainly not a disaster, but well off of its best levels of the session. So we go again, Steve. I've got to be honest, we haven't got off to a great start this year, I don't think, with these gun to the head trades, but it can all change with one trade. So anything you particularly fancy, or would you like me to have a go first?
Well, I fancy oil higher. I know we'll probably get some volatility, which may not be great for me. But for me, this is like a bullish flag formation, typical bullish flag formation, which is broken to the upside. I've got a gun to my head, so I've got to get in now. 80.55 stop, yeah, potentially. What's that? 68, that was a good year, Joe, 1968.
Vintage.
Let me see. Should we get close to that 3 to 1 risk reward?
You can get a better entry than that, can't you? You're a bit, or is that on the? You go. Didn't want you to do yourself out some pips here, Steve.
Yeah, I think the stop really would be a bit down here. So yeah, I'll put the stop below this this candle, this hourly candle low, 80.38. Getting in here at 81.14, targeting a move. Let's try and get a reasonable level. Really have to look at the daily charts. So yeah, probably targeting the right sort of level, really, in front of that $85 level. Yeah, we can get a little bit more out of it, but I'll leave it. I'll leave it where it. Yeah, I'll leave it where it is. 83.23.
Nice one.
No,
good luck.
Yep.
I'm going to take a look at Aussie US dollar. So I am still backing and banging this drum that dollar is going to move higher. This is the daily charts. Got a bit messy, if I'm honest. We did have a head and shoulders here, which I really like, which played out really nicely. But then I started looking at the chart on a longer term perspective, and I was thinking, was there even bigger head and shoulders in play here, which would have broken around about this point here to the downside. We've seen a move up in sort of consolidation fashion, maybe forming a bit of a flag before a continuation lower. So what I really like is that we've seen a break to the downside here, quite clearly, an impulsive move through that support. And now what we're seeing is a bit of a retest of the underside of that. So on the hourly chart, just to try and finesse the entry a little bit, I've got a 61.8% fib level at 72.17, which is just this very short-term move here. I've also got a resistance on this blue line at 72.32. So, a good bit of resistance there to use for the benefit of my stop. I'm going to sell it now at 72.05. I'm going to target a move down to these lows at 71.30 with a stop loss at 72.30. So looking for just a tad under 3-to-1 risk reward on that.
Nice one, Joe.
We shall see. Anyway, let's have a look at what's out today. Data-wise, 1:30 UK time. Sorry, in the US we have the latest CPI figures. Prices expected to rise 6.9%. So obviously this is a pretty big number, and obviously front and center of the concerns from the Federal Reserve, and doing everything they can to obviously keep that in check without damaging the US economy. So that is a big data point that we'll be watching at 1:30 this afternoon. At 3:30 this afternoon, we have US EIA crude inventory numbers. Stockpiles fell by 2.1 million barrels in the previous week. So if you are following Steve in his oil trade today, be aware that that is out at 3:30 this afternoon and could create some volatility in the oil price.
Nice one.
Anything further to add, Steve?
No, just talking the other day. So recession is like normally you get 3 quarters of negative GDP growth. Is that right?
Is it 3 or 2? 2 consecutive?
2. Is it 2?
Quarters of negative GDP.
What's a depression? Is
I don't know.
6 or something, or 4?
Not sure.
I think it's sort of 3 recessions equals a depression, is it? I'm not sure. Just something to bear in mind as you go into the day, spreading
is it?
good tidings of joy.
Properly depressed us there. A depression is a severe and prolonged downturn in economic activity, commonly defined as an extreme recession that lasts 3 or more years.
Right. I knew that number 3 was in there
or
somewhere.
which leads to a decline in real gross domestic product of at least 10% in a given year.
Oh, wow. 10%, really?
I mean, that would have been knocked out of the park last on the COVID, wouldn't it?
Well, United Kingdom is down 9.8%, according to the World Bank. India down 8%, United States down 3.5%. Are you being honest, United States? Yeah, apparently. So, yeah, I just heard the word depression mentioned on the news the other day, so I thought I'd just cheer everyone up.
Yeah, thanks for that, Steve. Well, you have a good day, won't you? Maybe go and see someone.
Brilliant.
All right, thanks then, Steve. I'll speak to you, everybody else tomorrow.
Yeah, maybe.
Maybe, yeah.
Cheers.
Bye.